Hey guys, welcome back. In today's video, we are talking about the upcoming AMC news, the AMC profit increasing, the surge in calls, and many more in this video. First, we're taking a look at this. So, in this month of April, Cinemark reached 30.89. On the last day of April, Cinemark is currently trading at 28.69. Do not be dismayed, it's not just an AMC thing. Upcoming theater revenues will provide an abundance of fruit. Now, what we are seeing right now has been that AMC, when we saw it hit the high of 194, kind of middle of April, to now where we see it close at 145. Now, we are seeing the decline, but first we have to understand that this has been a climb from the low of 0.93. If we take a look at the very start of April, we are still up. What we also have to realize is that there are, of course, other companies within the same industry that are facing that same decline as well. It isn't to say that this is normal. It isn't to say that there is no manipulation or suppression in AMC, but we have to understand what's happening within the industry. And furthermore, what we have to understand the future of AMC. Because firstly, when we take a look at this, the best part is that we are filling up more seats and more sales with less release compared to pre-COVID era, and our numbers are not too far off from pre-COVID era for Q2. And what we are seeing is that everyone's looking solely at new releases, not realizing how absolutely huge the re-releases have been exclusively for AMC. So this is why I think Adam stated the box office didn't need to reach pre-pandemic numbers for AMC to be profitable. So let's quickly look at this and why this is important. We have to understand that we are in AMC for the long haul. Majority of the apes who have been AMC would have been AMC for a long time now. So this decline in a matter of 2 weeks shouldn't be something that's damaging to you. It shouldn't be something that gets you emotional because you have been here for a long time. Not to mention, if we talk about what's there to do for the long term, we've already talked about how well AMC is doing. And especially with what AMC has that's exclusive. We talked about because AMC has more screens than any other companies within the industry, they are not able to only capture what's popping right now in terms of new releases, but with previous films, with old movies that people still want to watch, they are able to put that on screen without hindering the movement, the momentum of the new films that are successful. And so this is something that's exclusive for AMC because they have so much screens that they are able to pull this off. And it's why something that's going to allow AMC to grow and ultimately bring in more revenue and profit. Not to mention, we have to remember is that we are seeing more and more institutions not only upgrading AMC, but are actually buying even more AMC. This is why this small decline of AMC isn't worrying me, especially when I know that people, not just the apes, not just the retail investors, but big institutions are also eyeing this up as an opportunity. And remember, they told you that theaters were dead, but what we have to see, that this is the record that AMC is making. This is what we are seeing in terms of result. 4 million plus at AMC in 5 days, 217 million global opening, packed theaters worldwide. This is how we know that AMC is growing. So not only are we not relying on the new success, and bear in mind, the new success are extremely, extremely good. So we're already profiting a lot from that. But on top of that, we are able to be successful with old movies that people are still wanting to watch, and AMC is still profiting off of that. So I think that this is completely great because it's not just the ticket prices that AMC is making profit, but of course, also the food and beverages and others. Now, is why I've said that, yes, we're seeing within the industry to sell off. It isn't to say that there is no manipulation, because when you take a look at this, we're not seeing a major growth in Cinemark or IMAX. You can see they're up 0.48%, 0.93%, but the drastic difference is that AMC is down 4.17%. So yes, we have been seeing some sell-off. Yes, it is kind of normal within the industry, but like I've said, it isn't to say there is no manipulation or suppression whatsoever, and this is just what we are seeing at. Firstly, this is already ridiculous, but secondly, it just shows still how discounted and undervalued that we are. It's why more and more people are wanting to buy AMC, and ultimately one of the biggest reasons for why we are seeing this kind of stark contrast of AMC down 4.1%, but Cinemark is growing with only up 0.48%, is the fact that they want AMC to be institutional owned. They want retail to sell their AMC shares. Because if you take a look at in terms of the news of AMC, or if you want to look for the bad news, there really hasn't been many news in the past, in the recent. The only news really are good news. in terms of how well the new box office is doing, how AMC is profiting. The only news that I can find that isn't exactly positive like what we've seen, but isn't exactly negative either, is this particular news, which is filing the 10K amendment today, where AMC now has 612 Class A common shares outstanding. Now, the increase in shares is from the ongoing February 150 million ATM. So this is pretty much the only news for AMC recently that isn't talking about how well we're doing. And if anything, this is a negative because we already know that there was going to be a share increase. We were already aware of the 150 million, and now this is just really accounting and reflecting for that. So it isn't like it's a sudden surprise that we saw an increase in shares. This is something that we knew has already happened. And so it just goes to show how ridiculous it really is. And on top of this, we are seeing the short interest going back up. And what we have already said is that at the end of the day, the short interest that's reported to us is clearly not true. We've seen this happen already for AMC, we know the same for GME, and more importantly, recently when Avis had the short squeeze, the short interest going up for up until the short squeeze was only showing 15 to 25%, similar to where AMC is at. And so it really goes to show that the self-reported short interest is not true. And when you consider what we've used with indicators and how we were shown 300% synthetic interest, those are some of the data that we need to be looking at. But the fact that short interest is going back up is already showing how this sell-off that's happening in AMC isn't because investors are leaving, isn't because there's any bad news for AMC. And we have already shown this, but it's because of the suppression, it's because of the constant shorting that is happening. You can see here, this isn't a dying company, it's naked shorts submerged and stuck in their positions, trying to capitulate retail before the massive run up into fair market value. You know, we're seeing it upwards of $44. Again, off exchange 77%. And this is what we've said, when you're seeing a 77% short off exchange, you're seeing the price go down. We've seen it in the past before, even on a 60%, which is still higher than the market norm, we are able to see AMC go up 10%, 15% in a day. And so it really is just showing how damaging the off exchanges are and how they're trying to manipulate AMC and why we haven't seen a real reflection of the price of AMC. And another thing, and now let's talk about the good news, and to really understand why we're in a position to go up and why we shouldn't be seeing any sell-off whatsoever, is because the last time AMC was free and not under bankruptcy riddle chains were early 2020, prior to the massive debt loads taken on during the pandemic. Since 2020, AMC has been in a restrictive covenant prison. Every major move required consent solicitations, and tonight is the first time since pre-ape and pre-pandemic era that the international audience and domestic administrative hurdles have been cleared simultaneously. So remember, we talked about how difficult it is for AMC to really navigate in the past few years. Not to say that they haven't done well, but it's to talk about how difficult it has been. And the reason why this is important is because even in a time we were seeing massive restrictions to how we were able to navigate, Adam Aron was still doing big things. You can see, firstly, they introduced the XL at AMC auditoriums in April 2025. Now, the reason why this is important is because it targets larger screen viewing without relying on the other premium formats like IMAX or Dolby Cinema, where AMC now will have to, in the past, rely on higher ticket prices for IMAX, which will recoup investments, are now able to actually get a bigger percentage. We see a greater flexibility and lower cost compared to licensed premium formats because of what AMC has done. So they're able to get a greater percentage of the ticket sales of each and every showing with this, where this year more patrons are choosing AMC as their preferred theater of choice, with XL AMC being the predominant screen selection. This is something that AMC were doing for the past few years. This is something that they were doing whilst it was extremely difficult to get any solutions through. And you can see how this is coming to fruition right now. The fact that people are viewing this over any other screens means that the box office right now, not only are we seeing it grow, but a bigger percentage of that will have a much larger margin than previous years because they're going to watch it at the AMC screens as opposed to the others. And that's the major thing when you take away here. And one of the things that Adam Aron has said in the past is that cash is king. Perhaps 99.3 million due AMC from the insurance issuer shows up on the balance sheet this quarter. So we have so many things to really be watching for the earnings this Tuesday, is why I'm extremely excited for that as well. And it really goes on to show what we could be looking out for, because we've already seen in terms of what Cinemark has actually done. Firstly, 643.1 million, which they have beat estimates, attendance plus 17% year over year, net loss narrowed sharply to just 6.4 million, management called it the strongest Q1 since the pandemic. So this is the earnings for Cinemark. Now, the reason why this is important is because we can then use this to kind of gauge where perhaps AMC is going to do. Now, the fact we're seeing them beating revenue, the fact we're seeing attendance go up, remember, that's the same going to be for AMC as well. And we have more screens, our revenue is obviously going to be way bigger. So we really have multiple exciting things to watch. And the fact that Cinemark is profiting off of this, we're going to be seeing AMC do really well as well. And you can see how they were obviously affected as well, but it really still goes on to talk about how discounted AMC is. Now, if you want to take a look at the potential technicals, given that AMC as support has had a healthy pullback from the move up, and that movie after movie keeps overperforming, debt pushback years, you would see a convincing high volume bounce with the market. Control the order flow, control the price. It looks like they want to hold back volume so they can keep pushing it lower. So like we've said, we've seen nothing but good news from AMC. But from the price action, from the technical analysis, you're seeing what they're trying to do. You can see the manipulation that is happening, but we are seeing how people are still constantly buying. And the question to really be asking is, if AMC shares flow has been sold out for years, what are millions of us retail investors buying daily? Because it's clearly not affecting the price the way real supply and demand should. Now, this is how we understand there are billions of synthetics, and the constant fact that we are buying and yet prices are moving is just the proof of that. But the reason why this is important is because if we know that there are more and more synthetics being sold, we know that the squeeze price is only going to get higher and higher. Now, one of the sad things to look at is this particular chart where we talk about the correlation between Adam Aaron saying to the moon and the price movement. In 2021, we saw how the price moved. We were comparing that with 2026. It clearly hasn't followed the same thing, but in the long run, there potentially is still a bigger thing to go. I guess it is quite upsetting to see this, but it isn't to say that this is the end. Now, for GME, what we're seeing is the same thing as well, where apparently this borrow fee is only sitting at 0.37, but they're trying to say that stocks is easily fine, when clearly that isn't the case. Because when you take a look at the ETFs that includes GME, like GMEU, like XRT, you're seeing how the shares are constantly being borrowed and there are zero shares available. And then when you're seeing things like this, where they talk about a GameStop reporting error about how we're seeing investors doubling their investment, but Wall Street is reporting that as a full sale. It just goes on to talk about what's actually happening behind the scenes. Another major thing is the June $30 strike calls. We were seeing multiple people constantly buying into it. And today we see that GME broke $26 as net call premium soared over 3 million on the day. And this is just going on about how people are viewing this. And now a big part of this is perhaps the return of Roaring Kitty. Previously in the past, we talked about how Roaring Kitty were active as he signed up for Pro. And now we're seeing this. We're perhaps seeing how he's actually loading up onto these calls and why we're seeing such a big open interest and why we see the positions really go up. And that this is to correlate with Roaring Kitty returning within the scenes. And on top of all of this, you're seeing how Citadel now is worried. We're seeing them filing a multi-page tantrum, begging regulators to kill blockchain trading under the guise of innovation confirms. And it looks like they are in fact worried about the transparency that this will bring. Why would a firm worry about transparency if they have nothing to worry about? It really begs the questions here. And then what we're seeing is another margin call from short sellers. We're talking ticker symbol AKAN, where it was at 90 cents and it shot up to 34.75 because the float was traded 81 times on Friday. Again, similar story to AMC, and this is why they're trying to prevent AMC, because you can see 325 to 34.41 within a matter of 9 days. So if we want to talk about synthetics, if we want to talk about how damaging that can be, this is what happened to a stock like this. Imagine what will happen for AMC. A big thing that's happened macro right now is we talked about the Japanese yen. We talked about hitting 160, And then you instantly saw the Bank of Japan intervening, and you can see this massive decline with over 2%. And the reason this is worrying is because the last time we saw this, we were seeing massive things happening, like Bitcoin losing 20%, Nikkei falling 12%, and other things. And the fact we're seeing the bond already going up is already a warning of this. And it's why we're seeing this fluctuation right now. On Thursday, we saw 8.26 in terms of Federal Reserve, the reverse repo. On the Friday, we saw 0.6. Massive volatility, massive influx. It's just showing that there is massive liquidity issues going on right now. As always, man, this is financial advice, and I'll catch you guys next time.